Hi, this is Jeanie Shea, your Hoover realtor, and today I'm so excited to introduce you to Michael Weber. Good to see you, Michael.
Thank you, Jeanie.
Good to see you. And Michael owns Weber Mortgage. And the reason I wanted to talk with Michael today is because he has done such an awesome job of taking care of all of my clients, from first-time home buyers all the way to those that are downsizing and everything in between. But lately, I've gotten a lot of questions from first-time home buyers. And so I really wanted to focus on that today and provide some tips for first-time home buyers. Some of them are young couples just getting married. Some of them are, further along and they've just gotten to that point in their life where they can afford that first house. So, Michael, will you take a minute and talk to us about, I've just sent John and Mary to you, newly engaged couple, getting married, buying their first house. What do they need to do in order to qualify for a mortgage?
Absolutely. Well, from a first-time homebuyer standpoint, we face unique circumstances in that typically they don't know what to do. They don't really know where to start. So the most important thing that they can understand is ask questions. Anything that they don't know, they need to understand. I'm a good guy. There's a lot of good mortgage people out there, and they're probably looking out for your best interest. But please don't hesitate to ask questions about anything that you're told. That doesn't really apply towards something specific about the home buyer process, but a lot of times people are nervous and feel like they're not trusting you by asking those questions. So please.
They don't know what to ask.
That's right, they don't.
So they don't know what they don't know.
The direction that we begin sometimes is stuff that, Jeanie, you'll have already dealt with about, how much house are you wanting to buy? Where are you looking to purchase? From a mortgage standpoint, we're primarily looking for income, we're looking for assets, and then we're looking for down payment. And we're going to look at credit. So those are the big four. We need to understand how much money that you make. And by the way, you probably think you know how much money that you make, but there's a pretty good chance that by underwriting guidelines, it's a different amount. We need to understand your employment history. Did you just start this job? Do you receive commissions? Have you been there a while? There's a lot of variables that need to be kind of talked through to understand the whole situation. We also need to understand assets. How much money do you have? Do you have retirement accounts? Those particular accounts, assets, can often strengthen a loan that's going to underwriting. And then also down payment. Now, a lot of people feel like if I don't have a down payment, I can't purchase a house. That is simply not true. There are plenty of different vehicles in there designed to get first-time buyers in a house. And so going through those different options is really important on the front end.
So one thing I didn't hear you say, what about debt? What if I'm that first-time home buyer and I have 2 car payments and, I ran up that Von Mar, credit card account and, just got back from my favorite Disney vacation. And so I have this debt. So I'm kind of wondering, what does that look like for a first-time home buyer trying to buy a house?
That's a great question. And from a debt standpoint, the most important thing you can know is never assume that you understand how that's going to play into the picture. You need to talk with a professional about that, because here's a perfect example. A student loan is a debt that we see a lot of times with a first-time buyer. They're fresh out of college and they have this student loan, but because they're just out of college, it may be deferred. They may not owe $1 in a monthly payment. But from an underwriting standpoint, we have to account for the fact that at some point you're going to have to pay money on that loan. And that means we're going to have to count some sort of payment. That's not something you can figure out on your own, but a mortgage professional can help you understand all the debts that you have and how those payments are going to impact qualifying for that loan.
What if I missed a car payment one time? Oops, and we paid it, but it just kind of got away. How does that? Can I still buy a house?
Yes, we see what we call that slow payment, and we see slow payment all the time. It will not by itself keep you from purchasing a home. It's factored into the underwriting equation, so it's a part of the picture, but it doesn't define who you are. And Fannie Mae, Freddie Mac, HUD, and the VA all understand that, and they make adjustments for those. They're essentially looking at risk. And so if you've missed a payment, that's going to increase the risk, but it doesn't necessarily disqualify you from moving forward.
So I'm a newlywed and I have all this great furniture. I want to go ahead and get my furniture, and I have that new car I want to get, and all these things on my wish list. and I want to get that house. So I was thinking we'd go ahead and get the furniture and get the new car. And so what's your opinion of those sorts of things?
That's a fantastic question, and we see it all the time. People mean well, but they don't understand the timing is crucial. Nothing that you buy outside of the mortgage is probably going to be impacted by you having a mortgage, meaning you can probably still qualify for the car or the furniture or the fridge once you've purchased your mortgage. But everything that you purchase prior to getting the mortgage is going to impact your ability to qualify for that mortgage.
Time out. Did everybody hear that? Everything that you purchase before you apply for a mortgage impacts your ability to get that mortgage.
That's correct.
That's critical.
Huge.
Okay, that's cool. So everybody listen up. That's a big deal. Okay.
Doesn't mean you can't get what you want. It just means you have to get it in the order that works best in your favor. So those conversations are conversations we love to have on the front end. And we have this email, like our top 10 things not to do while you're applying for a mortgage. And one of them is don't even buy a stick of gum on credit, which of course, sometimes I get phone calls that are like, are you saying I should not use my credit cards? Yeah. Not necessarily, but everything you do impacts how much you can afford to purchase. So yes, you need to push the pause button, like the timeout you just called, and you need to talk with a mortgage professional before you do anything else. If you're thinking about purchasing a home in the next 2 years, you should be having a conversation with a mortgage professional before you do anything else credit related.
Wow. So that's a lot of information for a first-time home buyer, and we could go on and on and on. But I want to thank you, Michael. Those are just great tips, and I hope all of our first-time home buyers who are listening, or about to be first-time home buyers who are listening, feel free to call me, call Michael. We're both here to help you through this process. And I wanted to thank you for your time, Michael.
Thank you, Jeanie.
Good to see you.